Mayuresh Joshi, Head Equity Research, William O'Neill joining in. Mayuresh, your thoughts on some of these consumer durables? They've had a good summer after 3 years of weakness.
Afternoon, Mangala. Oh yes, and with the heat that is still on, I think the sales will still keep on going up for these players. So I think a lot of players who are into contract manufacturing, who have also got into original design manufacturing, players like Amber and Dixon selectively, will probably keep on doing well on two counts. One, I think the expected demand is expected to burgeon further in the next few quarters and years. And second, with their capacities and the PLIs that they probably have in terms of assistance, that should probably aid them along with the ODM growth, which should also abet margins to a certain extent. So yeah, I think as the discretionary spending patterns improve, both discretionary and durables from the consumption arena should continue to improve.
Okay, all right. Mayuresh, what about a couple of these other names? APL Apollo Tubes, that's been one of the big outperformers. So the stock is heading into, these valuation problems, because it's not trading cheap at all. Been a big outperformer, the king of the market, so to call it, the largest player in there. But how do you approach it? Because if infrastructure is going to do well, some of these makers are going to do well, but maybe valuations have become a bit of a headwind. What's your preference from these tube makers?
Afternoon, Nigel. I think phenomenal run, and I think it has been all backed up in terms of the entire infrastructure story as well. The Nal Se Jal Yojana itself is a 70,000 crore year-mark scheme, and expectations are that with further allocations happening in terms of rural housing and the commitment in terms of having Nal Se Jal, that is water taps across every village and town in India, I think a lot of these piping solution companies are going to find flavor. The second aspect obviously is in terms of capacities, the volume growth itself, and how input costs will play out. So as input costs have remained largely stable, even if there is a marginal uptick in input costs, there is a high probability of passing it through. And as that aspect takes place, the operating leverage clearly plays out. Obviously, I think the aspect in terms of valuations are damn expensive at this juncture, Nigel, as we speak. They're way above pivot levels of few of these players. But it is a very interesting space to be in. So I think investors who probably got into these piping solution companies, APL, Apollo, Astral as an example, I think they should continue holding the stock if you're holding it from lower levels.
Do you like any of the housing finance names? All of them have been abuzz ever since the news reports came out that, there would be an increased allocation towards the Pradhan Mantri Awas Yojana.
So, Mangalam, I think that is one aspect which is driving these stocks up. So I think within the space, LIC Housing is something that fits our criteria at MarketSmith, both in terms of EPS, RS rating, institution holdings, so on and so forth. A large base on their balance sheet itself is retail. The expectations in terms of solid advances growth should continue for the company. At some stage, at the end of this calendar year, there should be some element of a rate cut coming through. As that starts happening, I think NIMs and spreads should normalize as well. And all these aspects in terms of how the credit costs are shaping up, expectations in terms of solid growth expected to come through as the real estate cycle still have 3 to 4 years left. I think there will be solid elements of growth to come through. So I think picking and choosing within the pack, I think LIC is something that remains on the watch list.
Okay, all right. Thanks very much for that short conversation.